Wall Street surges as unemployment skyrockets. Let's have a look. Good evening, everyone. Florian.heise here, and welcome to another episode of HeiseSays. I hope you're all having a wonderful Easter and are ready for Easter Sunday tomorrow. I know I've just gone through and organized all the children's eggs, and of course I have taxed the appropriate amount for a dad. You've got to do it. But I thought we would finish this Saturday night by having a look at this article from ABC News regarding just Wall Street surging, the best week it's had in 46 years, everyone. And you remember, I think I was talking about this last week, just how unemployment skyrocketed over there. Claims for unemployment just shot up phenomenally. But of course, Wall Street is having its best week in 46 years. Now I'll bring up trading economics, everyone, so we can have a look at that chart. But, you know, there could be a few arguments for this. We'll have a look here. What do you want to look at? The S&P 500. I mean, there you go. Look at that climb. The Dow Jones. We'll bring that one up. Bloody, look at that. Look at that climb. And finally, we'll look at the NASDAQ 100. And there you go. Look at that climb. So, there's a few questions. I mean, do you think this is a real recovery? Is it all going gangbusters? Or is it a dead cat bounce where the market will continue to fall down? Or could it be an example of the Cantillon effect that Richard Cantillon first observed, where new money is created and how it essentially is creating a bubble in a portion of the economy? Could that be what we are seeing here? Now, if you're interested, I'm starting a HeiseSays book club, and we're reading through his book. If you just check out on the Discord server, you can find a link to the book. I recommend everyone has a look at it if you're interested. So let's have a look at this. So, unemployment claims in the United States have skyrocketed again, while the Federal Reserve has injected $3.6 trillion worth of additional stimulus to minimize the economic fallout of the illness. The Australian dollar jumped to a one-month high of 63.4 US cents this morning as the record Fed stimulus weakened the greenback. Meanwhile, Saudi Arabia, Russia, and the world's biggest oil producers have struck a deal to cut production by a record amount, 10 million barrels per day. But that was not enough to prevent a further slump in oil prices. So let's just jump and have a look at the time of recording. What is oil sitting at? 31 for Brent. Crude, 23. The Australian share market is closed for the Easter long weekend, but might enjoy solid gains when it reopens next Tuesday. It may follow a strong lead from the Wall Street benchmark S&P 500, which surged by 12% this week, its biggest weekly gain since '74. The S&P index added 1.5% to close at 2,790 points. The industry-skewed Dow Jones index lifted by 296 points, or 1.2%, to 23,719, while the tech-heavy NASDAQ rose 0.8 points to 8,154. European markets also jumped. London's FTSE, German's DAX were up 2.8 and 2.2%, respectively. The spot price of gold also surged to a one-month high of $1,684 an ounce. Global markets were propped up by hope. The number of new illness cases was slowing down, and the latest announcement from the US Central Bank on further stimulus being pumped into the system. So this is the thing, it's driven on hope and stimulus. Hope and stimulus. Does anyone think we're not in a bubble in the stock market? Give me another explanation, please. Because have the profits of these businesses, have they all shot up? How many of these profit forecasts are just plunging? How many of them are unicorns that are artificially inflated because of share buybacks? How many of them are normal companies artificially inflated because of share buybacks? So the Fed pushes deeper into uncharted territory. The Fed said it would allocate a massive $2.3 trillion to further shield the US economy from the economic damage from the illness. It had already cut interest rates to almost zero and relaunched its QE program in March, pledging to buy an unlimited number of bonds. Unlimited QE, everyone. Unlimited QE. Remember that when these reserve banks or Federal Reserve, when they are buying these bonds, if they're creating the money out of nothing, they are buying future. Let's not even think about it as money. They are buying future work that people have to do in order to generate the currency that pays their legal requirement under fear of punishment to pay tax. That's what they're getting for nothing. The more and more I look into this, it really feels like, and I know I'm going to sound like Max Kaiser here, because he brings it up all the time, but it feels like a form of serfdom. You know, our kings, our lords, we're constantly working towards. We need to give up a portion, set aside a third of everything we grow, although I know we pay a lot more than that every year our harvest. So we get to, live. We get all these perks. We'll have to see, guys. Under its latest stimulus measures, the Fed will offer 4-year loans through the banks to struggling American businesses. Now, why would you want to prop up struggling businesses? This new Main Street facility will funnel up to $600 billion in loans to companies that have up to 10,000 employees or less than $2.5 billion in revenue. Firms receiving the loans must commit to make reasonable efforts to maintain payroll and retain workers and not use the funds to refinance existing debt. Well, that's interesting, because here in Australia I was talking to some people, I was asking the question, and people were saying in the comments they were going to get these loans from the government to refinance their debt, which made a lot of sense. If you've got a business, you've got all this credit card debt, you can borrow money and a lot cheaper. I don't blame them. The central bank will also spend up to $500 billion purchasing municipal bonds from local governments, which are on the front lines of the health crisis and are also facing a possible collapse in their tax revenue as unemployment spikes and businesses shut under tough social distancing rules. Many of these programs are due to lapse in September, but Fed Chair Jerome Powell said the Fed would spend whatever it takes to get the pandemic under control and get the economy back on track. Do you reckon after all this is finished, they'll be able to restart it, everyone? We are deploying these lending powers to an unprecedented extent. We will continue to use these powers forcefully, proactively, and aggressively until we're confident we're solidly on the road to recovery. I mean, there you go, guys. So the stock market has just shot up based on dreams, hopes, and money printing. Money printer go brewer. Surging unemployment. It was enough to make investors ignore the bad news that 6.6 million Americans applied for unemployment insurance claims last week, according to figures released by the US Labor Department. This brought the total to 16.8 million who had lost their jobs in the past 3 weeks. The record number of applicants for unemployment benefits are the result of businesses such as restaurants, bars, and other social venues being closed. In its first month alone, the illness crisis is poised to exceed any comparison to 2008 Great Recession, said Daniel Zhao, senior economist at Glassdoor, an online recruitment firm. The new normal for unemployment insurance claims will be the canary in the coal mine for how long effects of the crisis will linger for the millions of newly unemployed Americans. And don't think Australia is immune to what's happening in America, guys, or what's happening in China, or what's happening in other countries. It's all going to have an effect on our economy too. So OPEC strikes a record oil deal. The Organization of Petroleum Exporting Countries, or cartel, and its allies agreed on Thursday to cut oil output by a record 10 million barrels per day, or 10% of global supply, for 2 months. All members will reduce their output by 23%, with Saudi Arabia and Russia each cutting 2.5 million, and Iraq cutting 1 million. but the price of Brent crude tumbled by 2.5% to US 32 a barrel. Its value has plummeted by half since the beginning of the year. Investors are worried these supply cuts won't be enough to combat the unprecedented plunge in oil demand caused by the illness pandemic. OPEC, which includes non-members like Russia, is also expecting the US and other producers to join in its effort to cut production by 5 million barrels and prop up prices to help deal with the deepest oil crisis in decades. Global fuel prices have plunged by around 30 million barrels, or 30% of global supplies, as steps to fight the virus have grounded planes, cut vehicle usage, and curbed economic activity. If an unprecedented 50 million barrels per day cut were to happen, it would not be enough to stop the world's storage facilities quickly filling up. And far from signaling any readiness to offer support, US President Donald Trump has threatened OPEC member Saudi Arabia, saying it could face sanctions and tariffs if it does not cut supply enough to help the struggling US oil industry. And here's the thing, guys. Here's the thing. Now, remember, everyone pays tariffs. You either pay it by buying the imported goods at the higher price or buying the local goods at a higher price. The consumer, the average Joe worker, is the one that cops it in the end. Just saying, keep that in mind. Because if people were more than just talk about supporting local business, then they would be doing that without the need for tariffs. And they're not. I've seen it all the time. I've seen it on jobs. You specify all the local manufactured superior products, better warranties, better ability to repair. What do you think happens, guys? So we're expecting other producers outside OPEC Plus Club to join the measures, which might happen tomorrow during G20. The head of Russia's wealth fund and one of Moscow's top oil negotiators, Kryly Dmitriev, told Reuters. On Friday, Saudi Arabia will host a call between energy ministers from the Group 20 of major economies. So there we have it, guys. There we have it. An incredible surge in the US stock market, while unemployment is higher than the GFC. Do you think we're living in a clown world now, everyone? Do you think money printer go brr? Maybe everyone's expecting it to inflate the stock market bubble. We'll have to see, guys. Can the markets rebound? Will they rebound? Let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join the channel on YouTube or on Patreon. You can use our affiliate links at Amazon or eBay, or Kucoin and Independent Reserve. We have merch from HeiseSays and Teespring. You can send us gold using Gold Pass, and you can also support the channel via PayPal. Thanks everyone, have a great night, and I will see you all tomorrow. Bye for now.